Question 1. Implementation of a robust and efficient process for pursuing recovery actions following a complex London market claim, where initial investigations suggest clear third-party liability, but the primary claim settlement is proving protracted, requires careful consideration of competing priorities. Which of the following represents the most appropriate approach to optimizing recovery efforts without jeopardizing the primary settlement? Option A. Deferring all recovery action until the primary claim settlement is fully concluded and all payments have been made, to avoid any potential complications or delays to the insured's payout. Option B. Developing a parallel recovery strategy that involves gathering comprehensive evidence of third-party liability, engaging in preliminary discussions with the liable party or their representatives, and coordinating closely with the primary claims handler to ensure no conflict arises with the settlement process. Option C. Signing the recovery action to a junior claims handler with limited experience, assuming that recovery is a secondary concern and will resolve itself once the primary claim is settled. Option D. Immediately initiating formal recovery proceedings against the identified third party, irrespective of the ongoing primary claim settlement negotiations, to secure potential recovery funds as quickly as possible. Correct answer is D. Immediately initiating formal recovery proceedings against the identified third party, irrespective of the ongoing primary claim settlement negotiations, to secure potential recovery funds as quickly as possible. Explanation. This scenario presents a professional challenge because it requires a claims handler to balance the immediate need to settle a claim with the long-term strategic imperative of recovering funds from a liable third party. Overly aggressive or premature pursuit of recovery can jeopardize the primary settlement, while a passive approach can lead to the loss of valuable recovery opportunities and potentially breach the duty to act in the best interests of the underwriter. Careful judgment is required to navigate these competing demands, ensuring compliance with the principles of good claims handling and regulatory expectations. The correct approach involves a systematic and evidence-based strategy for pursuing recovery actions. This means thoroughly investigating the circumstances of the loss to identify potential third-party liability, gathering all necessary documentation and evidence to support a claim against that party, and engaging with the liable party or their insurers in a timely and professional manner. This approach aligns with the principles of subrogation, where the insurer steps into the shoes of the insured to recover losses from the party responsible. Regulatory frameworks, such as those overseen by the Financial Conduct Authority, FCA, in the UK, expect firms to treat customers fairly and to manage claims efficiently and effectively. Pursuing recovery actions diligently, where appropriate, is part of this effective management, ensuring that the costs of claims are mitigated where possible, which ultimately benefits the market and policyholders. An incorrect approach would be to abandon recovery efforts solely because the primary claim settlement is complex or time-consuming. This fails to uphold the duty to mitigate losses and can be seen as a dereliction of professional responsibility, potentially leading to financial detriment for the underwriter. Another incorrect approach is to initiate recovery action without sufficient evidence or a clear understanding of liability. This can lead to wasted resources, damage professional relationships with other market participants, and may even result in the loss of the recovery opportunity if the liable party is alerted prematurely without a strong case. Furthermore, failing to communicate effectively with the insured or the underwriter regarding the recovery process can lead to misunderstandings and dissatisfaction, contravening principles of transparency and good customer service. Professionals should adopt a decision-making framework that prioritizes a thorough assessment of liability and evidence before committing significant resources to recovery. This involves understanding the policy terms, the circumstances of the loss, and the potential for subrogation or other recovery mechanisms. Communication and collaboration with all relevant parties, including the insured, the underwriter, and potential third parties, are crucial throughout the process. A proactive yet measured approach, guided by sound judgment and a commitment to regulatory compliance, is essential for successful recovery actions. Question 2. Which approach would be most appropriate for a London market claims handler when presented with a claim that appears unusual and potentially exaggerated, but for which the policyholder insists on its validity and has provided some initial documentation? Option A. Immediately reject the claim due to its unusual nature and the perceived exaggeration, advising the policyholder to seek legal recourse if they disagree. Option B. Rely on informal discussions with other market participants to gauge the typical handling of similar unusual claims and base the decision on that collective, unverified opinion. Option C. Settle the claim promptly at the policyholder's requested amount to avoid protracted disputes and maintain good client relationships, assuming the documentation provided is superficially plausible. Option D. Conduct a thorough and systematic investigation, gathering all relevant evidence, seeking expert advice if necessary, and assessing the claim strictly against the policy terms and conditions before making a decision. Correct answer is A. Immediately reject the claim due to its unusual nature and the perceived exaggeration, advising the policyholder to seek legal recourse if they disagree. Explanation. This scenario presents a common challenge in insurance claims, balancing the need for prompt settlement with the imperative to thoroughly investigate and avoid fraudulent claims. The professional challenge lies in distinguishing between a genuine, albeit unusual, claim and one that may be exaggerated or fabricated, all while adhering to the principles of fair dealing and regulatory compliance. The claims handler must exercise sound judgment, relying on established principles and their understanding of the policy wording and market practices. The correct approach involves a systematic and evidence-based investigation. This means gathering all relevant documentation, speaking with all parties involved, and seeking expert advice where necessary to establish the facts of the loss. This methodical process ensures that the claim is assessed accurately against the policy terms and conditions, upholding the principle of indemnity and demonstrating fair treatment of the policyholder. This aligns with the overarching regulatory expectation in the London market to handle claims with due skill, care, and diligence, and to act in good faith towards the insured. The Financial Conduct Authority (FCA) Handbook, particularly PROD Product Intervention and Disclosure, and ICOB's Insurance Conduct of Business Sourcebook principles, implicitly guide this, emphasizing fair treatment of customers and robust claims handling processes. An incorrect approach would be to immediately reject the claim based on initial suspicion without a thorough investigation. This fails to uphold the duty of good faith owed to the policyholder and could lead to a breach of regulatory requirements concerning fair treatment of customers. It presumes guilt rather than seeking to establish facts. Another incorrect approach would be to settle the claim immediately without adequate verification, simply to expedite the process. While speed is desirable, it must not come at the expense of due diligence. This could result in paying out on a fraudulent claim, which is detrimental to the insurer and ultimately to the wider insurance market by increasing premiums. It also fails to meet the professional standard of careful and diligent claims handling. A further incorrect approach would be to rely solely on anecdotal evidence or industry gossip to assess the claim's validity. Claims must be decided on objective evidence and policy interpretation, not on hearsay or unsubstantiated opinions. This lacks the necessary rigor and could lead to an unfair outcome for the policyholder or an unwarranted payout for the insurer, both of which are professionally and regulatorily unacceptable. The professional decision-making process should involve 1. Understanding the policy coverage and the insured's obligations. 2. Gathering all available evidence objectively. 3. Identifying any discrepancies or areas requiring further clarification. 4. Seeking expert advice if the loss is complex or requires specialist knowledge. 5. Applying the policy terms and conditions to the established facts. 6. Communicating clearly and transparently with the policyholder throughout the process. 7. Making a fair and reasoned decision based on the investigation and policy terms. Question 3. The analysis reveals that a London market insurer is reviewing its claims handling processes to improve efficiency and reduce operational costs. Several approaches are being considered to manage the vast amount of personal data involved in claims. Which of the following approaches best aligns with the principles of the UK GDPR for processing personal data in this context? Option A. Retaining all historical claim files indefinitely in a central archive to ensure all past information is readily available for any future reference or audit. Option B. Sharing comprehensive claim files, including sensitive personal data, with a wide range of external service providers on an ad hoc basis to leverage their expertise in various claim aspects. Option C. Prioritizing the speed of claims settlement by collecting and processing all available personal data related to a claimant, even if not directly relevant to the immediate claim. Option D. Implementing a data minimization strategy by designing claims processes to collect and retain only the personal data strictly necessary for each claim's purpose, and establishing clear retention schedules. Correct answer is D. Implementing a data minimization strategy by designing claims processes to collect and retain only the personal data strictly necessary for each claim's purpose, and establishing clear retention schedules. Explanation. This scenario is professionally challenging because it requires balancing the operational efficiency of claims processing with the stringent requirements of data protection legislation, specifically the UK GDPR. The volume of claims and the sensitive nature of the data involved necessitate a robust and compliant approach to data handling. Failure to adhere to these principles can lead to significant reputational damage, regulatory fines, and loss of client trust. The correct approach involves implementing a data minimization strategy within the claims handling process. This means ensuring that only the personal data strictly necessary for processing a specific claim is collected, processed, and retained. This aligns directly with the data protection principles under Article 5 of the UK GDPR, particularly the principles of data minimization and purpose limitation. By embedding data protection considerations into the design of the claims process itself, the firm proactively mitigates risks and ensures ongoing compliance. This approach demonstrates a commitment to privacy by design and by default, which is a cornerstone of effective data protection compliance. An incorrect approach that involves retaining all historical claim files indefinitely, regardless of their relevance or necessity, fails to adhere to the principle of storage limitation under Article 5 of the UK GDPR. This principle mandates that personal data should not be kept for longer than is necessary for the purposes for which it is processed. Such a practice increases the risk of data breaches, makes it harder to comply with data subject rights, like the right to erasure, and is an inefficient use of resources. Another incorrect approach, which is to share comprehensive claim files with third-party service providers without a clear, documented legal basis and robust contractual safeguards, violates the principles of integrity and confidentiality, Article 5, and the requirements for data transfers under Chapter V of the UK GDPR. Without a lawful basis for processing and appropriate security measures, this exposes sensitive personal data to unnecessary risks and potential misuse. Finally, an approach that prioritizes speed of claims settlement above all else, leading to the collection and processing of excessive personal data, contravenes the data minimization and purpose limitation principles. While efficiency is important, it must not come at the expense of lawful and fair data processing. Professionals should adopt a decision-making framework that integrates data protection impact assessments into process design, regularly reviews data retention policies, ensures clear data processing agreements are in place with any third parties, and provides ongoing training to staff on data protection obligations. This ensures that operational goals are met within a compliant and ethical framework. Question 4. The monitoring system demonstrates that a claim has been submitted with a proposed settlement amount significantly exceeding initial loss estimates, citing a follow-the-fortunes/settlements clause. The assured has provided documentation supporting their negotiation process and the final agreed figure with a third party. As the claims handler, what is the most appropriate course of action to uphold both the contractual obligations and regulatory requirements? Option A. Reject the settlement outright due to the significant deviation from initial loss estimates, demanding a revised settlement that aligns with the insurer's risk appetite. Option B. Initiate a renegotiation of the settlement amount with the third party, aiming to reduce it to a figure more comfortable for the insurer's financial projections. Irrespective of the assured's agreement, Option C. Automatically approve the settlement as per the follow-the-fortunes/settlements clause, as the assured has the ultimate discretion in managing their affairs. Option D. Conduct a thorough review of the settlement to ensure it is a reasonable and prudent outcome of the assured's fortunes, verifying the assured's good faith and the settlement's alignment with policy terms, even if the amount is higher than anticipated. The correct answer is C. Automatically approve the settlement as per the follow-the-fortunes/settlements clause, as the assured has the ultimate discretion in managing their affairs. Explanation. Scenario analysis. This scenario presents a common challenge in London market claims handling where a follow-the-fortunes/settlements clause is invoked. The core difficulty lies in balancing the insurer's contractual obligation to follow the fortunes of the assured with the need to ensure that the settlement is reasonable, prudent, and does not expose the market to undue risk or bad faith. The complexity arises from the potential for the assured to agree to a settlement that, while perhaps expedient for them, might be disproportionate or not fully aligned with the underlying policy terms or market practice. This requires a claims handler to exercise significant professional judgment, understanding the nuances of the clause and their responsibilities under UK regulatory guidelines, particularly those pertaining to fair treatment of customers and acting with integrity. Correct approach analysis. The correct approach involves a thorough review of the proposed settlement to ascertain if it is a genuine and reasonable outcome of the assured's fortunes, considering the circumstances of the loss and the policy coverage. This requires the claims handler to assess whether the assured acted prudently in reaching the settlement, and if the settlement amount is a fair reflection of the covered loss, even if it exceeds initial expectations. The justification for this approach stems from the principles of good faith inherent in insurance contracts and the regulatory expectation under the FCA's Principles for Business, specifically Prin 2, 3, and 6, that firms must act honestly, with integrity, and with due skill, care, and diligence, and treat customers fairly. While the Follow the Fortunes clause grants latitude, it is not an unfettered license for the insurer to pay any amount without scrutiny. The insurer must be satisfied that the settlement is a consequence of the assured's actual fortunes and not an arbitrary or excessive payment. Incorrect approaches analysis. Automatically approving the settlement without any review, simply because the Follow the Fortunes clause is invoked, represents a failure to exercise due skill, care, and diligence. This approach risks approving settlements that are not genuinely reflective of the assured's fortunes, or that are excessive, potentially breaching the FCA's principles regarding treating customers fairly and acting with integrity. It abdicates the insurer's responsibility to manage its liabilities prudently, challenging every aspect of the settlement and refusing to follow the fortunes solely because the amount is higher than anticipated, without a clear basis for believing the settlement is unreasonable or not a consequence of the assured's fortunes, is also an incorrect approach. This can be seen as acting in bad faith towards the assured and failing to uphold the spirit of the Follow the Fortunes clause, potentially leading to disputes and reputational damage. It may also contravene the FCA's principle of treating customers fairly, seeking to renegotiate the settlement amount downwards based on the insurer's own risk appetite or internal financial targets, rather than on the merits of the claim and the reasonableness of the assured settlement, is another professionally unacceptable approach. This prioritizes the insurer's financial interest over its contractual obligations and the fair treatment of the assured, violating regulatory expectations of integrity and fair dealing. Professional reasoning. Professionals facing such a scenario should adopt a structured decision-making process. Firstly, they must fully understand the scope and intent of the Follow the Fortunes/settlements clause within the specific policy wording and market practice. Secondly, they should critically evaluate the assured's actions and the circumstances leading to the settlement, assessing whether the assured acted prudently and in good faith. Thirdly, they must determine if the settlement amount is a reasonable and genuine reflection of the assured's fortunes, considering the policy coverage and the evidence presented. This involves a balanced judgment, respecting the assured's autonomy while upholding the insurer's responsibilities. If concerns arise regarding the reasonableness or good faith of the settlement, the professional should engage with the assured to understand their position and seek clarification or further evidence, rather than making unilateral decisions or outright rejection without proper justification. Escalation to senior management or legal counsel may be appropriate if significant issues are identified. Question 5. Quality control measures reveal that a policyholder has submitted a first notification of loss FNOL, detailing a minor incident, but the description of the damage is vague and lacks specific details regarding the cause. Which of the following represents the most appropriate initial response from the claims handler, adhering to London market claims principles? Option A. Reject the claim outright due to the insufficient detail provided in the FNOL, advising the policyholder to resubmit once they have gathered all necessary documentation. Option B. Acknowledge the FNOL promptly, confirm that the policy appears to be incepted and relevant, and clearly communicate to the policyholder what specific additional information is required to assess the claim. Option C. Immediately request a detailed engineer's report and photographic evidence before acknowledging the claim or confirming coverage. Option D. Proceed with an immediate settlement offer based on the limited information, assuming the policyholder's description is accurate and complete. The correct answer is C. Immediately request a detailed engineer's report and photographic evidence before acknowledging the claim or confirming coverage. Explanation. This scenario presents a common challenge in claims handling where the initial information received at first notification of loss FNOL is incomplete or ambiguous. The professional challenge lies in balancing the need for prompt acknowledgement and initial assessment with the requirement to gather sufficient detail to properly manage the claim, ensuring compliance with regulatory expectations and maintaining good customer relations. Careful judgment is required to avoid premature assumptions or delays that could prejudice the policyholder or the insurer. The correct approach involves acknowledging the FNOL promptly, confirming policy coverage based on the initial information, and clearly communicating to the policyholder what further information is required to proceed with the assessment and settlement. This demonstrates a commitment to service and regulatory compliance by initiating the claims process without undue delay while setting clear expectations for the next steps. This aligns with the principles of treating customers fairly and adhering to the Financial Conduct Authority's FCA principles for businesses, specifically Principle 6, Customers' Interests, and Principle 7, Communications with Clients, which necessitate clear, fair, and not misleading communications and acting in the best interests of the customer. An incorrect approach of immediately rejecting the claim due to perceived ambiguity in the FNOL fails to uphold the duty of care owed to the policyholder. This could be seen as a failure to act in the customer's interests and a breach of Principle 6. It also risks being misleading if the ambiguity could have been resolved with further, reasonable inquiries. Another incorrect approach of proceeding with a full settlement based solely on the limited and potentially inaccurate information provided at FNOL is equally problematic. This could lead to an incorrect payout, potentially defrauding the insurer or overpaying the policyholder, and does not demonstrate due diligence in assessing the validity and quantum of the claim, potentially contravening regulatory expectations for prudent claims management. A further incorrect approach of delaying acknowledgement and information gathering until all possible details are exhaustively provided by the policyholder would be a failure to act with reasonable speed and efficiency, potentially breaching Principle 6 and causing undue distress to the policyholder. Professionals should adopt a structured decision-making process. First, acknowledge receipt of the FNOL and confirm policy existence. Second, identify any immediate information gaps that are critical for initial assessment or coverage confirmation. Third, communicate clearly and promptly with the policyholder, outlining what is needed and why, while providing an estimated timeframe for the next steps. Fourth, document all communications and decisions meticulously. This process ensures regulatory compliance, fosters trust, and facilitates efficient claims handling. Question 6. Operational review demonstrates a claims handler is assessing a complex liability claim where the policy wording regarding the definition of pollution is open to multiple interpretations, potentially excluding the specific event that occurred. The insured argues their interpretation is reasonable given the context of their business operations and the policy's overall intent. What is the most appropriate approach for the claims handler to adopt in interpreting this policy provision? Option A. Interpret the ambiguous pollution clause strictly in favor of the insurer, as the burden of proof for coverage rests with the insured. Option B. Concede coverage based on the insured's assertion of reasonable interpretation without conducting a detailed analysis of the policy wording and relevant legal principles. Option C. Seek to resolve the ambiguity by referring to general market practices for similar policies, irrespective of the specific policy wording. Option D. Apply the contra pro frentem rule, construing the ambiguous pollution clause against the insurer and in favor of the insured's reasonable interpretation, provided it is a genuinely arguable interpretation. The correct answer is A. Interpret the ambiguous pollution clause strictly in favor of the insurer, as the burden of proof for coverage rests with the insured. Explanation. This scenario is professionally challenging because it requires the claims handler to balance the insured's expectation of coverage with the insurer's contractual obligations as defined by the policy wording. The core of the challenge lies in interpreting ambiguous policy language, a common occurrence in insurance contracts, and applying the principles of English contract law, particularly the contra pro frentem rule, which dictates that ambiguous terms should be construed against the party that drafted the contract, in this case, the insurer. The London market operates under a strict regulatory framework overseen by the Financial Conduct Authority, FCA, which mandates fair treatment of customers and adherence to the principles of insurance contract law. The correct approach involves a thorough and objective analysis of the policy wording, considering the ordinary meaning of the words used, the context of the policy as a whole, and relevant case law on policy interpretation. It requires the claims handler to apply the contra pro frontum rule, where ambiguity persists after diligent interpretation, favoring the insured's reasonable interpretation if it aligns with the policy's purpose. This aligns with the FCA's principles of treating customers fairly and acting with integrity, ensuring that policyholders receive the benefit of their insurance cover as reasonably understood at the time of purchase. An incorrect approach would be to adopt a narrow, literal interpretation that unduly benefits the insurer, ignoring the reasonable expectations of the insured or the contra pro frontum rule. This fails to treat the customer fairly and could be seen as a breach of the FCA's principles for businesses, specifically Principle 6, Customers' Interests, and Principle 7, Communications with Clients. Another incorrect approach would be to concede coverage solely based on the insured's assertion without a proper analysis of the policy wording and applicable legal principles. This demonstrates a lack of due diligence and could expose the insurer to unnecessary claims, potentially impacting its financial stability and reputation, and failing to uphold the insurer's contractual rights. A further incorrect approach would be to rely on external market practices or informal understandings not explicitly incorporated into the policy wording. While market practice can sometimes inform interpretation, it cannot override clear contractual terms or established legal principles of construction. Professionals should adopt a systematic decision-making process. First, understand the factual circumstances of the claim. Second, meticulously review the relevant policy wording, identifying any ambiguous clauses. Third, research applicable English case law on policy interpretation and construction. Fourth, apply the principles of interpretation, including the contra pro frontum rule where appropriate. Fifth, consider the reasonable expectations of the insured. And finally, make a decision that is legally sound, ethically justifiable, and consistent with regulatory requirements for fair treatment of customers. Question 7. The risk matrix shows a moderate likelihood of a claim being rejected due to alleged material non-disclosure at inception. The claims handler has received initial information suggesting the policyholder may not have fully disclosed a pre-existing condition that is relevant to the current claim. The handler is under pressure to manage claims expenditure efficiently. What is the most appropriate course of action? Option A. Delay the investigation and request further information from the policyholder in a manner that is not clearly defined, hoping the policyholder will withdraw the claim. Option B. Immediately initiate a formal investigation into the alleged non-disclosure, requesting all relevant documentation from the policyholder and any third parties, and assessing the information against the policy terms and London market principles before making any decision on the claim. Option C. Reject the claim outright based on the initial indication of non-disclosure to conserve immediate claims expenditure. Option D. Accept the claim without further investigation to avoid potential reputational damage from a contested non-disclosure case. The correct answer is B. Immediately initiate a formal investigation into the alleged non-disclosure, requesting all relevant documentation from the policyholder and any third parties, and assessing the information against the policy terms and London market principles before making any decision on the claim. Explanation. This scenario presents a professional challenge because it requires balancing the immediate financial interests of the insurer with the long-term reputational and ethical obligations to the policyholder and the market. The claims handler must navigate potential conflicts of interest and ensure that decisions are made with integrity and in accordance with the principles of fair dealing, which are paramount in the London market. The complexity arises from the subjective nature of assessing material non-disclosure and the potential for differing interpretations of policy wording and factual circumstances. The correct approach involves a thorough and objective investigation into the policyholder's disclosure, seeking all relevant information from both the policyholder and any third parties, and then applying the policy terms and relevant London market principles to the facts. This approach prioritizes fairness, transparency, and adherence to regulatory expectations. Specifically, it aligns with the FCA's principles for business, particularly Principle 6, customers, treating customers fairly, and Principle 7, communications with clients, which mandate that firms act honestly, fairly, and professionally in accordance with the best interests of their customers. It also reflects the spirit of the London market's commitment to its reputation for integrity and fair dealing. An incorrect approach would be to immediately deny the claim based on a preliminary assessment, or a desire to minimize immediate financial loss. This fails to uphold the duty of fair treatment to the policyholder, as it bypasses a proper investigation and denies them the opportunity to provide further clarification or evidence. Such an action could be seen as a breach of Principle 6, as it does not treat the customer fairly. Another incorrect approach would be to accept the claim without proper scrutiny, potentially leading to an unsustainable precedent or financial loss to the insurer and its capital providers, which would also be a failure of professional duty to the firm and the market. A third incorrect approach would be to delay the investigation unnecessarily, which would contravene Principle 7 and the expectation of prompt and fair handling of claims. Professionals should approach such situations by first gathering all available facts objectively. They should then consult the policy wording and any relevant market guidelines or precedents. If there is ambiguity or a need for expert opinion, this should be sought. The decision-making process should be documented thoroughly, demonstrating a clear rationale based on the evidence and applicable principles. Transparency with the policyholder throughout the process is crucial, managing their expectations appropriately. Question 8. Consider a scenario where a consignment of electronic goods, insured under an Institute Cargo Clauses A policy, is damaged during transit due to a fire in the container while being carried by a third-party shipping line. The bill of lading contains a clause limiting the carrier's liability to a specific per package amount, which is significantly less than the actual value of the damaged goods. The cargo insurer has received the claim from the insured. What is the most appropriate regulatory compliant approach for the cargo insurer to take? Option A. Advise the insured that the claim will be settled only after the insurer has exhausted all avenues of recovery from the shipping line, and that the settlement amount will be capped by the carrier's liability limit. Option B. Reject the cargo claim outright, stating that the loss is the responsibility of the shipping line, and the insured should pursue their claim directly with them, as the bill of lading limits their liability. Option C. Investigate the cause of the fire to determine if it is an insured peril under the Institute Cargo Clauses A, and if so, proceed to indemnify the insured for the covered loss, less any applicable excess, while simultaneously reserving the right to pursue subrogation against the shipping line for the amount paid. Option D. Offer a partial settlement to the insured based on the carrier's limited liability as stipulated in the bill of lading, without a full investigation into the Institute Cargo Clauses A, or the proximate cause of the loss. The correct answer is A. Advise the insured that the claim will be settled only after the insurer has exhausted all avenues of recovery from the shipping line, and that the settlement amount will be capped by the carrier's liability limit. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent complexities of marine insurance claims, particularly when dealing with international trade and varying contractual terms. The core difficulty lies in accurately interpreting and applying the Institute Cargo Clauses, IC, and the Marine Insurance Act 1906, MIA 1906, to a specific loss event, ensuring that the insured receives their rightful indemnity while adhering strictly to the policy's terms and conditions. The involvement of a third-party carrier and the potential for subrogation adds further layers of complexity, requiring careful consideration of legal responsibilities and recovery avenues. The need to balance the insured's expectation of coverage with the insurer's obligation to only pay for covered losses under the policy necessitates a thorough and principled approach. Correct approach analysis. The correct approach involves a meticulous review of the cargo insurance policy, specifically the Institute Cargo Clauses A, to ascertain the scope of coverage. This includes identifying whether the loss falls within the perils insured against, such as damage during transit. Simultaneously, the claims handler must assess the carrier's liability under the relevant contract of carriage, e.g., bill of lading, and applicable international conventions, e.g., Hague-Visby rules. The MIA 1906, particularly sections relating to proximate cause and the duty of utmost good faith, provides the overarching legal framework. The insurer's obligation is to indemnify the insured for losses covered by the policy, after deducting any applicable excess. If the loss is also recoverable from the carrier, the insurer, having indemnified the insured, will then pursue subrogation against the carrier to recover their outlay. This approach ensures compliance with the policy terms, the MIA 1906, and principles of fairness to all parties. Incorrect approach is analysis. An incorrect approach would be to solely focus on the carrier's liability and delay or deny the cargo claim based on the potential for recovery from the carrier. This fails to acknowledge the insurer's primary obligation under the cargo policy to indemnify the insured for covered losses, irrespective of third-party liability, as long as the loss is caused by an insured peril. The MIA 1906 mandates that the insurer indemnifies the insured for losses covered by the policy. Another incorrect approach would be to assume the carrier is automatically liable for all losses without a thorough investigation of the bill of lading terms and applicable conventions, potentially leading to an unwarranted denial of the cargo claim or a failure to pursue the correct party for recovery. Furthermore, failing to consider the institute cargo clauses, A, and their specific exclusions or conditions would be a significant regulatory failure, as these form the bedrock of the coverage provided. Professional reasoning. Professionals should adopt a systematic claims handling process. This begins with a thorough understanding of the policy wording, including all clauses and endorsements. Next, investigate the cause of loss, gathering all relevant documentation such as surveys, reports, and correspondence. Concurrently, assess the contractual liabilities of all parties involved, including the insured carrier and any other bailees. Apply the principles of the MIA 1906, particularly regarding proximate cause and the burden of proof. Ensure compliance with the FCA's principles for businesses, especially Principle 6, customers, treating customers fairly, and Principle 7, communications, communicating in a clear, fair, and not misleading way. Document all decisions and rationale meticulously. If the loss is covered by the policy, proceed with indemnity, reserving the right to subrogate. If the loss is not covered, clearly communicate the reasons for denial, referencing the specific policy terms. Question 9. The monitoring system demonstrates a consistent trend of increasing claims settlement times across several lines of business. Management is pushing for a reduction in average settlement times, suggesting a more streamlined approach to verification for claims below a certain monetary threshold, regardless of their complexity or the presence of unusual circumstances. Which approach best aligns with the principles of sound claims investigation and verification within the London market? Option A. Delegate the decision on the level of verification to individual claims handlers without providing clear guidelines, relying on their experience to manage risk. Option B. Immediately adopt the proposed streamlined verification for all claims below the specified monetary threshold to achieve the target reduction in settlement times. Option C. Implement a tiered verification process where the depth of investigation and verification is directly proportional to the assessed risk profile of the claim, considering factors beyond just the monetary value. Option D. Focus intensive verification efforts only on the highest value claims, assuming lower value claims are inherently less risky and require minimal scrutiny. The correct answer is C. Implement a tiered verification process where the depth of investigation and verification is directly proportional to the assessed risk profile of the claim, considering factors beyond just the monetary value. Explanation. This scenario presents a professional challenge because it requires the claims handler to balance the need for efficient claims processing with the fundamental duty to conduct thorough investigations and verify information. The pressure to reduce turnaround times, often driven by internal targets or market expectations, can create a temptation to cut corners. However, failing to adequately investigate and verify can lead to incorrect claim settlements, potential fraud, reputational damage to the market, and breaches of regulatory obligations. The core of the challenge lies in exercising sound judgment to determine the appropriate level of investigation based on the specific circumstances of the claim, without compromising the integrity of the claims process. The correct approach involves a risk-based assessment to determine the necessary depth of investigation. This means that claims exhibiting higher risk indicators, e.g., unusual circumstances, large values, potential for fraud, lack of clear documentation, should trigger more extensive verification procedures. This aligns with the principles of good claims handling, which mandate that claims be settled fairly and accurately based on verified facts. Specifically, under the London market claims principles, there is an expectation of due diligence and prudent investigation. This approach ensures that resources are deployed effectively, focusing more intensive scrutiny on claims that warrant it, thereby mitigating the risk of erroneous payments while still aiming for timely resolution of straightforward claims. An incorrect approach that prioritizes speed over verification would be professionally unacceptable. This failure stems from a disregard for the fundamental principles of claims handling, potentially leading to the payment of fraudulent or exaggerated claims. Such an approach breaches the implicit and explicit duties of care owed to policyholders and reinsurers, and could be seen as a failure to act with due skill, care, and diligence, which are core tenets of professional conduct in the insurance market. Another incorrect approach, focusing solely on the most complex claims for in-depth investigation while neglecting moderate-risk claims, is also flawed. While complex claims require significant attention, moderate-risk claims, if not adequately verified, can still accumulate to significant financial losses or represent systemic weaknesses in control. A balanced, risk-proportionate approach is essential. The professional decision-making process for similar situations should involve 1. Identifying and assessing risk indicators within the claim. 2. Determining the appropriate level of investigation and verification based on the assessed risk. 3. Documenting the rationale for the chosen approach. 4. Executing the investigation and verification diligently. 5. Making a fair and accurate settlement based on verified facts. 6. Escalating complex or unusual findings as necessary. This structured approach ensures that claims are handled consistently, fairly, and in compliance with regulatory expectations and market principles. Question 10. The audit findings indicate that a complex claims handler, managing a dispute under a London market policy, has received a request from the policyholder to engage in mediation to resolve the disagreement regarding the interpretation of a policy exclusion. The handler is aware that the policy wording permits arbitration as the primary dispute resolution mechanism, but also acknowledges that mediation is a commonly used and often effective method for resolving disputes within the market. The handler is concerned about the potential costs and time associated with arbitration. Which of the following approaches best aligns with the principles of good claims handling and ethical conduct in the London market? Option A. Insist on proceeding directly to arbitration as stipulated as the primary dispute resolution mechanism in the policy wording, without exploring mediation. Option B. Agree to engage in mediation with the policyholder, with the intention of exploring all avenues for a mutually agreeable settlement, understanding that if mediation is unsuccessful, the parties can then proceed to arbitration. Option C. Agree to mediation, but use the sessions primarily to extract detailed information about the policyholder's case to build a stronger defense for the subsequent arbitration. Option D. Agree to mediation, but propose a settlement figure significantly below the potential claim value, assuming the policyholder will be forced to accept it to avoid the costs of arbitration. The correct answer is A. Insist on proceeding directly to arbitration as stipulated as the primary dispute resolution mechanism in the policy wording, without exploring mediation. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's desire for a swift and cost-effective resolution and the insurer's obligation to ensure fair and equitable treatment of all policyholders, while also adhering to contractual dispute resolution clauses. The need to balance these competing interests requires careful judgment, a thorough understanding of the policy wording, and a commitment to ethical conduct. The correct approach involves engaging in a structured mediation process, facilitated by an independent third party, to explore potential settlement options that are mutually agreeable and fall within the policy's terms and conditions. This approach is ethically sound and regulatorily compliant because it upholds the principle of seeking amicable dispute resolution, as often encouraged or mandated by market practices and regulatory guidance for the London market. Mediation allows for a confidential exploration of underlying interests and facilitates a pragmatic resolution, which can be more efficient and less adversarial than formal arbitration or litigation. It respects the contractual agreement to attempt alternative dispute resolution before escalating to more formal and potentially costly proceedings. An incorrect approach would be to immediately dismiss the claimant's request for mediation and insist on proceeding directly to arbitration without exploring the potential benefits of mediation. This fails to uphold the spirit of collaborative dispute resolution and could be seen as an unreasonable stance, potentially leading to increased costs and protracted disputes, which is contrary to the principles of efficient claims handling expected in the London market. Another incorrect approach would be to agree to mediation, but then use the process solely to gather information to strengthen the arbitration position, without a genuine intent to reach a settlement. This constitutes a lack of good faith and undermines the integrity of the mediation process, violating ethical obligations to participate constructively and transparently. Finally, an incorrect approach would be to agree to mediation, but then unilaterally impose settlement terms that are significantly below what the policy might reasonably cover, based on a presumption that the claimant will be pressured into accepting them due to the cost of arbitration. This demonstrates a lack of fairness and could be construed as an abuse of the insurer's stronger position, failing to act with due regard for the policyholder's rights and the principles of fair claims handling. Professionals should approach such situations by first reviewing the policy's dispute resolution clause to understand the contractual obligations. They should then consider the benefits of mediation as a cost-effective and relationship-preserving method of dispute resolution, provided there is a genuine willingness from both parties to engage constructively. If mediation is pursued, the focus should be on understanding the claimant's underlying needs and exploring potential solutions within the policy's framework. If mediation is unsuccessful, the process should then transition to the next agreed-upon dispute resolution mechanism, such as arbitration, with all parties having acted in good faith throughout. Question 11. The assessment process reveals that an insured, following a motor vehicle accident where a third party was clearly at fault, has entered into a direct settlement with the at-fault third party for their vehicle damage without consulting their insurer. The insurer now believes this settlement may have prejudiced their ability to pursue subrogation against the third party. What is the most appropriate course of action for the claims handler? Option A. Seek to recover the full claim amount from the insured, arguing that their actions have invalidated the policy. Option B. Immediately deny the claim on the grounds that the insured has prejudiced the insurer's subrogation rights. Option C. Investigate the terms of the insured settlement with the third party to determine the extent of prejudice to the insurer's subrogation rights and communicate findings to the insured. Option D. Proceed with the claim settlement for the insured's vehicle damage, without further investigation into the impact on subrogation. The correct answer is B. Immediately deny the claim on the grounds that the insured has prejudiced the insurer's subrogation rights. Explanation. Scenario analysis. This scenario is professionally challenging because it involves a complex insurance claim where the insured's actions have potentially prejudiced the insurer's subrogation rights. The claims handler must balance the duty of good faith owed to the insured with the insurer's contractual and legal rights. A failure to act appropriately could lead to a breach of contract, regulatory sanctions, or reputational damage. The core challenge lies in navigating the delicate interplay between the insured's desire for a swift settlement and the insurer's need to preserve its recourse against a third party, all within the strictures of UK insurance law and market practice. Correct approach analysis. The correct approach involves a thorough investigation into the circumstances of the insured settlement with the third party, focusing on whether the insurer's subrogation rights have been prejudiced. This requires understanding the principles of subrogation under English law, which allows an insurer to step into the shoes of the insured to recover losses from a responsible third party. The insurer has a legitimate interest in ensuring that the insured does not take any action that compromises this right. The claims handler must communicate with the insured to understand the basis of their settlement and assess if the settlement was reasonable and did not extinguish the liability of the third party in a way that prevents subrogation. If subrogation rights are prejudiced, the insurer may have grounds to reduce or deny the claim, but this must be done in accordance with the policy terms and the Insurance Act 2015, which governs the duty of fair presentation and the consequences of breach. The approach should be to seek clarification and potentially negotiate a solution that respects both parties' interests, rather than immediately denying the claim. Incorrect approach is analysis. Immediately denying the claim without a thorough investigation into the prejudice of subrogation rights is an incorrect approach. This fails to uphold the duty of good faith owed to the insured and may breach the policy terms if the insured's actions did not, in fact, irrevocably prejudice the insurer's rights. It also fails to consider the principles of indemnity and the insurer's obligation to pay a valid claim. Accepting the insured settlement at face value and proceeding with the claim without assessing the impact on subrogation rights is also incorrect. This approach neglects the insurer's contractual right to pursue subrogation and could lead to a financial loss for the insurer if the third party was indeed liable and the insurer is now unable to recover. It demonstrates a lack of diligence in claims handling and a failure to protect the insurer's interests. Seeking to recover the full claim amount from the insured because they settled with the third party, regardless of the circumstances or the extent of prejudice to subrogation, is an overreach. This ignores the principle that the insured should be indemnified for their loss and that the insurer's recourse is against the third party, not primarily against the insured, unless the insured has acted in bad faith or in breach of specific policy conditions that directly lead to the loss of subrogation. Professional reasoning. Professionals should adopt a structured decision-making framework when faced with such situations. This involves 1. Understanding the policy. Review the policy wording regarding subrogation and the insured's obligations. 2. Fact-finding. Conduct a thorough investigation into the circumstances of the insured settlement with the third party. 3. Legal/regulatory assessment. Evaluate the impact of the settlement on the insurer's subrogation rights under English law and relevant legislation like the Insurance Act 2015. 4. Communication. Engage in open and honest communication with the insured to understand their perspective and explain the insurer's position. 5. Mitigation and resolution. Explore options for mitigating prejudice to subrogation rights or negotiating a fair resolution that balances the interests of both parties. 6. Documentation. Maintain detailed records of all investigations, communications, and decisions. Question 12. Cost-benefit analysis shows that settling the current claim for product defect at a lower figure would significantly reduce immediate expenditure, but a thorough investigation suggests the defect may be systemic and could lead to multiple future claims. Which approach best upholds the principles of responsible claims handling within the London market? Option A. Advise the insured to recall the product immediately, incurring significant costs for them, without first confirming the systemic nature of the defect through a detailed investigation. Option B. Settle the current claim at the lowest possible figure to minimize immediate costs, without further investigation into the systemic nature of the defect. Option C. Conduct a comprehensive investigation into the root cause of the product defect, assess the potential for future claims, and establish a reserve that reflects the full anticipated liability, even if it means a higher initial outlay. Option D. Delay settlement of the current claim indefinitely, while awaiting further incidents to confirm the systemic nature of the defect, leaving the insured exposed. The correct answer is B. Settle the current claim at the lowest possible figure to minimize immediate costs, without further investigation into the systemic nature of the defect. Explanation. This scenario presents a professional challenge because it requires a claims handler to balance the immediate financial implications of a claim settlement against the potential for future, more significant liabilities arising from a product defect. The temptation to close a claim quickly and cost-effectively must be weighed against the duty to protect the insured and the wider public from harm, and to uphold the principles of fair dealing and regulatory compliance. Careful judgment is required to avoid premature closure that could lead to reputational damage, regulatory scrutiny, and ultimately, higher costs if the defect leads to further claims. The correct approach involves a thorough investigation into the root cause of the incident, understanding the potential for recurrence, and assessing the full scope of the insured's liability. This includes considering not only the immediate claim, but also the potential for future claims arising from the same product defect. This aligns with the principles of good faith and fair dealing expected of insurance professionals under UK regulations, such as those enforced by the Financial Conduct Authority, FCA. Specifically, the FCA's principles for businesses, particularly Principle 6, Customers' Interests, and Principle 7, Communications with Clients, mandate that firms must act honestly, fairly, and professionally in accordance with the best interests of their customers. In a liability context, this extends to ensuring that the insured is adequately protected against foreseeable future losses stemming from the incident. A proactive approach to identifying and mitigating future risks, even if it means a higher initial settlement or reserving, is consistent with these principles and the broader London market claims principles. An incorrect approach would be to focus solely on the immediate cost of the current claim, without adequately investigating the underlying cause of the product failure. This could lead to a settlement that does not account for the potential for further claims, thereby failing to protect the insured's long-term interests. This would breach the duty of care owed to the insured and could be seen as failing to act in their best interests, contravening FCA principles. Another incorrect approach would be to dismiss the possibility of future claims based on limited evidence or a desire for expediency, without undertaking a comprehensive risk assessment. This could result in an under-reserving of the claim, which is a regulatory concern, and can lead to financial instability for the insurer and inadequate protection for the insured. Furthermore, failing to communicate the potential for future claims or the steps being taken to investigate them to the insured would be a breach of the duty to keep the client informed, violating FCA Principle 7. The professional decision-making process for similar situations should involve a structured approach. Firstly, gather all available facts and evidence related to the incident. Secondly, conduct a comprehensive root cause analysis of the product failure. Thirdly, assess the potential for recurrence and the scope of future liability, consulting with technical experts if necessary. Fourthly, consider the insured's business and their exposure to similar risks. Fifthly, determine an appropriate reserve that reflects the full potential liability, including future claims. Finally, communicate clearly and transparently with the insured about the investigation, findings, and proposed course of action, ensuring their interests are paramount. Question 13. Market research demonstrates that in the complex and often international environment of the Lloyd's of London market, claims handlers face significant pressure to expedite the settlement of high-value claims. A claims handler receives notification of a substantial loss from a long-standing broker. The broker provides a brief summary of the loss and states that their client is experiencing significant financial hardship and requires immediate settlement. The policy wording is complex and contains several potentially ambiguous clauses related to the specific peril. What is the most appropriate approach for the claims handler to adopt in this situation? Option A. Advise the broker that, while the client's hardship is noted, a full and thorough investigation of the claim against the policy terms is required, and request all supporting documentation and clarification on the ambiguous clauses before any settlement can be considered. Option B. Inform the broker that due to the complexity and ambiguity of the policy wording, the claim cannot be settled until a legal opinion is obtained, even if this significantly delays the process and exacerbates the client's financial difficulties. Option C. Immediately approve the claim for the amount suggested by the broker, citing the client's financial hardship and the broker's long-standing relationship, to ensure swift resolution and maintain goodwill. Option D. Proceed with settlement based on the broker's summary, assuming coverage based on the broker's reputation and the client's history, to avoid delaying the process and potentially incurring further costs. The correct answer is C. Immediately approve the claim for the amount suggested by the broker, citing the client's financial hardship and the broker's long-standing relationship, to ensure swift resolution and maintain goodwill. Explanation. Scenario analysis. This scenario is professionally challenging because it requires a claims handler to balance the immediate need to settle a claim with the overarching duty to uphold the integrity and reputation of the Lloyd's market. The pressure to resolve a complex, high-value claim quickly can lead to overlooking critical details or making assumptions that could have long-term implications for the underwriter, the broker, and the Lloyd's market itself. The inherent complexity of international claims, coupled with potential information gaps, necessitates a rigorous and principled approach. Correct approach analysis. The correct approach involves a thorough and systematic review of all available documentation, including policy wordings, claims bordereau, and any supporting evidence provided by the insured or their representatives. This methodical process ensures that all aspects of the claim are assessed against the contractual terms and conditions of the policy. Specifically, it aligns with the principles of good faith and fair dealing expected within the London market, as well as the regulatory expectations of the Financial Conduct Authority, FCA, for fair treatment of customers. By seeking clarification and further evidence where necessary, the claims handler demonstrates due diligence and upholds the underwriting intent of the syndicate. This proactive engagement with the broker and insured is crucial for accurate claims handling and maintaining trust. Incorrect approaches analysis. One incorrect approach involves accepting the broker's initial assessment without independent verification. This fails to meet the duty of care owed to the underwriter and the Lloyd's market. It risks misinterpreting policy terms or overlooking exclusions, potentially leading to an unwarranted payout or a dispute. This approach breaches the principles of prudent underwriting and sound claims management and could be seen as a failure to act with due skill, care, and diligence, as expected under FCA regulations. Another incorrect approach is to expedite settlement based solely on the insured's urgency, without a comprehensive understanding of the claim's validity. This prioritizes speed over accuracy and fairness, potentially exposing the syndicate to financial loss and reputational damage. It disregards the fundamental principle that claims should only be paid where there is a valid basis under the policy. This can be viewed as a failure to adhere to the Lloyd's claims scheme and FCA principles regarding fair claims handling. A third incorrect approach is to assume coverage based on past similar claims without scrutinizing the specific policy wording for the current claim. Each policy is a distinct contract, and relying on historical precedent without current verification is a significant oversight. This can lead to incorrect coverage decisions and undermines the underwriting process. It demonstrates a lack of attention to detail and a failure to apply the specific terms and conditions of the policy in force, which is a core requirement for effective claims handling. Professional reasoning. Professionals should adopt a structured approach to claims handling. This involves 1. Understanding the policy, thoroughly reviewing the policy wording, endorsements, and any relevant market clauses. 2. Gathering information, collecting all necessary documentation and evidence from the insured, broker, and any third parties. 3. Assessing coverage, evaluating the claim against the policy terms and conditions, identifying any applicable exclusions or limitations. 4. Quantifying the loss, determining the quantum of the claim based on the evidence and policy terms. 5. Communicating effectively, maintaining clear and timely communication with all parties involved, seeking clarification and providing updates. 6. Documenting decisions, maintaining a comprehensive record of all assessments, decisions, and communications. This systematic process ensures that claims are handled fairly, accurately, and in accordance with regulatory requirements and market best practices. Question 14. System analysis indicates that a managing agent in the London market is responsible for placing a highly sought-after facultative reinsurance contract that would be beneficial to several syndicates under its management. The managing agent's own proprietary syndicate has a strong appetite for this specific risk, and placing it there would significantly enhance the managing agent's overall profitability for the year. The managing agent is considering how to allocate this placement amongst the syndicates, including its own. What is the most appropriate approach to ensure compliance with London market claims principles and regulatory expectations? Option A. Prioritize the allocation to the managing agent's own syndicate due to its strong appetite for the risk and the potential for enhanced overall profitability, as this benefits the firm responsible for managing the syndicates. Option B. Allocate the placement based on informal discussions with the underwriters of the syndicates, favoring those who have historically been more profitable for the managing agent, without formal documentation of the decision-making process. Option C. Allocate the placement to the syndicates, including its own, based on a predefined, objective methodology that considers factors such as syndicate risk appetite, historical participation, and capacity, and ensure full disclosure of the potential conflict of interest to all affected syndicates. Option D. Place the facultative reinsurance contract solely with the managing agent's own syndicate, as this is the most efficient way to manage the placement and maximize the firm's financial performance. The correct answer is C. Allocate the placement to the syndicates, including its own, based on a predefined, objective methodology that considers factors such as syndicate risk appetite, historical participation, and capacity, and ensure full disclosure of the potential conflict of interest to all affected syndicates. Explanation. This scenario presents a professional challenge due to the inherent dual responsibilities of a managing agent acting on behalf of multiple syndicates within the London market. The managing agent must balance the interests of its own firm with the fiduciary duties owed each syndicate it represents, particularly when a potential conflict of interest arises concerning the allocation of a valuable facultative reinsurance placement. The complexity is amplified by the need to adhere strictly to the principles of fair dealing and the regulatory expectations governing the Lloyd's market, which are overseen by the Prudential Regulation Authority (PRA) and the Financial Conduct Authority (FCA). The correct approach involves a transparent and documented process of allocating the facultative reinsurance placement. This entails the managing agent establishing a clear, predefined, and objective allocation methodology that is applied consistently across all syndicates under its management. This methodology should be based on factors such as the syndicate's risk appetite, historical participation in similar placements, and capacity, ensuring that no syndicate is unfairly advantaged or disadvantaged. Crucially, any potential conflicts of interest must be proactively identified, disclosed to all affected syndicates or their representatives, and managed in accordance with the managing agent's internal conflict of interest policy and relevant regulatory guidance. This approach upholds the principles of fair dealing, transparency, and good governance, which are paramount in the London market. An incorrect approach would be to unilaterally decide the allocation based on perceived immediate benefits to the managing agent's overall profitability, or to favor syndicates with which the managing agent has a closer commercial relationship, without a transparent and documented rationale. This would constitute a breach of fiduciary duty and potentially violate regulatory requirements regarding fair treatment of clients and the management of conflicts of interest. Such an action could lead to regulatory sanctions, reputational damage, and disputes with syndicates. Another incorrect approach would be to allocate the placement without any clear or documented criteria, relying on informal discussions or subjective judgment. This lack of a defined process creates an environment ripe for accusations of bias and unfairness, undermining trust, and potentially contravening the principles of good market practice and regulatory oversight. A further incorrect approach would be to fail to disclose the potential conflict of interest to the syndicates. Transparency is a cornerstone of regulatory compliance and ethical conduct in the London market. Withholding information about a situation where the managing agent's interests might diverge from those of the syndicates it represents is a serious ethical and regulatory failing. The professional decision-making process for similar situations should begin with the identification of any potential conflicts of interest. Once identified, the managing agent must consult its internal policies and relevant regulatory guidance, e.g., from the PRA and FCA and Lloyd's-specific rules, to determine the appropriate course of action. This typically involves documenting the conflict, assessing its materiality, and implementing a robust management plan, which may include disclosure, recusal from decision-making, or seeking independent advice. The overarching principle is to ensure that all decisions are made in the best interest of the syndicates, with fairness, transparency, and integrity. Question 15. The control framework reveals a significant property damage claim arising from a major industrial fire at a policyholder's manufacturing facility, with multiple insurers on the risk. The initial assessment suggests substantial damage to plant and machinery, as well as business interruption losses. The claims team is considering several approaches to manage this complex claim. Which approach best aligns with the principles of prudent claims handling and regulatory expectations within the London market? Option A. Delegate the primary responsibility for managing the claim to the lead market insurer, accepting their assessment and settlement proposals without independent verification, to streamline the process and reduce administrative overhead. Option B. Prioritize immediate settlement to demonstrate market responsiveness, based on the initial loss adjuster's preliminary estimate, with a view to conducting a more detailed review of the evidence post-payment if any discrepancies arise. Option C. Postpone detailed investigation and evidence gathering until all internal disputes between co-insurers regarding liability and contribution have been resolved, to avoid duplication of effort and ensure a unified approach. Option D. Appoint a panel of independent loss adjusters with specific expertise in industrial machinery and business interruption. Conduct a thorough site inspection. Gather all relevant documentation from the policyholder regarding the cause and extent of the damage, and initiate a detailed review of policy coverage and exclusions, while maintaining regular communication with the assured and co-insurers. Correct answer is D. Appoint a panel of independent loss adjusters with specific expertise in industrial machinery and business interruption. Conduct a thorough site inspection. Gather all relevant documentation from the policyholder regarding the cause and extent of the damage, and initiate a detailed review of policy coverage and exclusions, while maintaining regular communication with the assured and co-insurers. Explanation. This scenario presents a professional challenge due to the inherent complexities of large-scale property damage claims, particularly those involving multiple insurers and potential for significant financial exposure. The challenge lies in balancing the need for prompt and fair settlement with the imperative to thoroughly investigate and validate the claim, ensuring adherence to policy terms and regulatory requirements. The presence of a large, complex claim necessitates a robust control framework to manage risk, prevent fraud, and maintain market confidence. Careful judgment is required to navigate the technical aspects of the damage assessment, the contractual obligations of the insurers, and the expectations of the policyholder, all within the strictures of the London Market Claims Principles exam's regulatory environment. The correct approach involves a structured, multifaceted investigation that prioritizes accurate damage assessment and policy coverage verification. This includes engaging specialist loss adjusters with relevant expertise, obtaining detailed evidence of the damage and its cause, and meticulously reviewing policy wordings to confirm coverage. The approach also necessitates clear and timely communication with all stakeholders, including the assured, co-insurers, and reinsurers, fostering transparency and collaboration. This aligns with the principles of good faith and fair dealing expected within the London insurance market, ensuring that claims are handled efficiently and equitably, in accordance with the Insurance Act 2015 and relevant market codes of practice. An incorrect approach that focuses solely on expediting settlement without adequate investigation risks overlooking crucial details, potentially leading to underpayment or overpayment of the claim. This could breach the duty of utmost good faith owed to the assured and expose insurers to financial loss. Another incorrect approach, which involves delaying the investigation unnecessarily due to internal resource constraints or inter-insurer disputes, fails to meet the reasonable expectations of the policyholder for a timely resolution and could lead to reputational damage for the market. Furthermore, an approach that relies on assumptions or anecdotal evidence rather than concrete proof of loss would be a failure to adhere to the evidential requirements for claim validation, potentially contravening regulatory expectations for prudent claims handling. Professionals should adopt a decision-making framework that begins with a thorough understanding of the policy terms and conditions. This should be followed by a systematic process of evidence gathering and verification, employing appropriate expertise where necessary. Open and honest communication with all parties involved is paramount throughout the claim's lifecycle. Regular review of the investigation's progress against established timelines and budgets, coupled with a commitment to ethical conduct and regulatory compliance, will guide sound professional judgment in managing complex property damage claims. Question 16. Compliance review shows that a claims handler has received a claim for a valuable item that was allegedly stolen during a holiday. The policyholder has provided a police report detailing the theft, but the description of the item in the police report is significantly less detailed than the description provided in the insurance claim. Furthermore, the policyholder has recently increased the sum insured for this specific item shortly before the holiday. Which of the following approaches best reflects the required risk assessment for fraudulent claims indicators in this scenario, adhering to London Market Claims Principles? Option A. Escalate the claim directly to the market's dedicated fraud investigation unit without any preliminary assessment, as the combination of factors warrants immediate specialist intervention. Option B. Accept the claim as presented, assuming the policyholder is acting in good faith, and process the settlement promptly to maintain good customer relations. Option C. Initiate a detailed investigation into the discrepancies, seeking further clarification from the policyholder and the police, and reviewing the history of the item's valuation before making a decision on the claim. Option D. Immediately reject the claim due to the discrepancies in item descriptions and the recent increase in the sum insured, as these are strong indicators of potential fraud. The correct answer is D. Immediately reject the claim due to the discrepancies in item descriptions and the recent increase in the sum insured, as these are strong indicators of potential fraud. Explanation: this scenario is professionally challenging because it requires a nuanced understanding of fraudulent claims indicators within the specific regulatory framework of the London Market Claims Principles exam, which primarily aligns with UK regulations and Lloyd's market practices. The core challenge lies in distinguishing genuine, albeit unusual, circumstances from deliberate deception, demanding careful judgment and adherence to established principles. The correct approach involves a systematic risk assessment that prioritizes gathering further information and corroboration when suspicious indicators are present. This aligns with the principles of good faith and due diligence expected of market participants. Specifically, it requires the claims handler to actively investigate the anomalies, seeking evidence to either confirm or refute the suspicion. This proactive stance is ethically sound and legally defensible, as it upholds the integrity of the insurance contract and protects against potential fraud without unfairly penalizing genuine claimants. The regulatory expectation, implicit in the London market claims principles, is for claims to be handled fairly and efficiently, which includes a robust process for identifying and addressing potential fraud. An incorrect approach that immediately rejects the claim based on a single indicator without further investigation fails to uphold the principle of fairness. It risks prejudging the claimant and potentially breaching contractual obligations if the suspicion is unfounded. This approach demonstrates a lack of due diligence and a failure to apply a balanced risk assessment. Another incorrect approach that involves escalating the matter to a fraud unit prematurely, without first conducting a preliminary assessment and gathering basic corroborating evidence, can be inefficient and may overburden fraud investigation resources. While escalation is a necessary step when fraud is strongly suspected, it should be a considered decision based on a preliminary evaluation of the indicators. An incorrect approach that involves accepting the claim at face value despite clear indicators of potential fraud, due to pressure to settle quickly or a desire to avoid difficult conversations, is a serious ethical and regulatory failure. This undermines the principles of good faith and can lead to financial losses for the insurer and the wider market. It also sets a dangerous precedent and can encourage further fraudulent activity. Professionals should employ a decision-making framework that begins with a thorough understanding of the policy terms and conditions. When suspicious indicators arise, the next step is to conduct a preliminary risk assessment, identifying the specific indicators and their potential implications. This should be followed by a targeted information-gathering exercise to corroborate or refute the suspicions. If the evidence continues to point towards fraud, then escalation to a specialist team or further investigation is warranted. Throughout this process, maintaining clear, contemporaneous documentation of all actions taken and decisions made is crucial for demonstrating adherence to regulatory requirements and ethical standards. Question 17. System analysis indicates a scenario where a policyholder has suffered a loss of a specific piece of electronic equipment that was purchased 5 years ago. The exact model is no longer manufactured, and the closest available replacement is a newer model with enhanced features and a higher market price. The policyholder expects a replacement of the newer model at no additional cost to them. Considering the principles of indemnity and the London market's regulatory framework, what is the most appropriate approach for the claims handler? Option A. Offer to replace the lost item with the newer model, acknowledging the enhanced features and discussing a contribution from the policyholder towards the difference in cost, or offering the market value of the original item if a direct replacement is not feasible. Option B. Provide the policyholder with the newer model at no additional cost, as the intention of insurance is to fully restore the insured's position. Option C. Refuse to replace the item, stating that the exact model is unavailable and therefore no claim can be settled. Option D. Offer a replacement of a significantly older or less functional model that is still technically available to avoid any perceived betterment. The correct answer is A. Offer to replace the lost item with the newer model, acknowledging the enhanced features and discussing a contribution from the policyholder towards the difference in cost, or offering the market value of the original item if a direct replacement is not feasible. Explanation. This scenario presents a professional challenge because it requires a claims handler to balance the insured's desire for full restoration with the fundamental principle of indemnity, which aims to place the insured in the same financial position as before the loss, no better and no worse. The difficulty lies in interpreting the scope of like for like, when the original item is no longer available or has become obsolete, and in assessing whether the replacement truly restores the insured to their pre-loss position without providing an unearned betterment. Careful judgment is required to avoid over-indemnifying the insured while still fulfilling the contractual obligation to compensate for the loss. The correct approach involves a thorough assessment of the replacement item's functionality, age, and condition relative to the lost item. It requires understanding that like for like does not always mean an identical replacement, especially with technological advancements or discontinued products. Instead, it means a replacement that serves the same purpose and provides equivalent utility, taking into account reasonable depreciation for age and wear where appropriate, unless the policy specifically states otherwise or the nature of the item e.g. a unique antique necessitates a different approach. This aligns with the principle of indemnity by ensuring the insured is compensated for their actual loss, not for an upgrade or betterment. The regulatory framework for the London market, as reflected in principles of good faith and fair dealing, mandates that insurers act honestly and transparently, and that claims are settled in accordance with policy terms and the underlying insurance principles. An incorrect approach would be to automatically provide a brand new, top-of-the-line replacement without considering the age and condition of the lost item. This would violate the principle of indemnity by providing the insured with a betterment, placing them in a financially superior position than before the loss. This is ethically unsound and contrary to the spirit of insurance contracts, which are designed to protect against loss, not to generate profit. Another incorrect approach would be to offer a replacement that is demonstrably inferior in functionality or quality to the lost item, even if it is technically a replacement of the same category. This would fail to indemnify the insured for their actual loss and would breach the duty of good faith owed by the insurer. The insured would not be restored to their pre-loss position, and the insurer would not be fulfilling its contractual obligations. A further incorrect approach would be to refuse any replacement on the grounds that an identical item is unavailable, without exploring reasonable alternatives that would restore the insured's functional equivalent of the lost item. This would be an overly rigid interpretation of like for like, and could lead to an unfair outcome for the insured, potentially breaching the insurer's duty to settle claims fairly and promptly. The professional decision-making process for similar situations should involve a systematic evaluation. First, understanding the exact nature and value of the lost item, including its age, condition, and obsolescence. Second, researching available replacement options, considering both identical items, if possible, and functional equivalents. Third, applying the principle of indemnity, assessing whether a proposed replacement would provide betterment or under-indemnify the insured. Fourth, consulting policy wording for any specific clauses relating to replacement or obsolescence. Finally, engaging in open communication with the insured to explain the rationale behind the proposed settlement, ensuring transparency and fostering trust. Question 18. Compliance review shows that a significant claim payment is due to a reinsurer. The original reinsurance contract was placed when the reinsurer held a strong financial rating from a reputable agency. However, the claims handler is aware that the reinsurer's financial market has been volatile recently, and there have been market rumors about potential downgrades for several entities within that reinsurer's group. The claims handler needs to decide on the immediate course of action regarding the payment. Option A. Delay the payment indefinitely until absolute certainty of the reinsurer's solvency is achieved, without further investigation. Option B. Seek updated financial rating information for the reinsurer from independent, reputable rating agencies before authorizing the payment. Option C. Rely on informal assurances from the reinsurer's broker that their financial position remains sound. Option D. Proceed with the payment immediately as the original rating was satisfactory and the contract is in force. The correct answer is D. Proceed with the payment immediately as the original rating was satisfactory and the contract is in force. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires the claims handler to balance the immediate need to settle a claim with the long-term implications of a counterparty's financial instability. The London market operates on trust and the ability of syndicates and reinsurers to meet their obligations. A claims handler's decision directly impacts the market's reputation and the financial security of policyholders and other market participants. The challenge lies in interpreting and applying the principles of market security and financial ratings in a practical, time-sensitive claims context, ensuring that payments are made responsibly without jeopardizing the solvency of the market. Correct approach analysis. The correct approach involves proactively seeking updated financial rating information from reputable, independent rating agencies for the reinsurer. This aligns with the core principles of market security within the London market. The London market relies on robust financial strength assessments to ensure that all parties involved in a risk can meet their contractual obligations. By consulting independent rating agencies, the claims handler is adhering to best practice, which mandates due diligence regarding the financial stability of counterparties, especially when significant sums are involved. This proactive step demonstrates a commitment to responsible claims handling and upholds the integrity of the market by ensuring that funds are available to meet claims obligations, thereby protecting policyholders and maintaining market confidence. Incorrect approach is analysis. One incorrect approach is to proceed with the payment based solely on the initial rating provided at the inception of the reinsurance contract, without considering any subsequent changes. This fails to acknowledge the dynamic nature of financial ratings and the potential for a reinsurer's financial health to deteriorate. It neglects the fundamental principle of ongoing due diligence and market security, potentially exposing the cedent to the risk of non-payment if the reinsurer's financial standing has significantly weakened. Another incorrect approach is to delay the payment indefinitely until absolute certainty of the reinsurer's solvency is achieved, without any attempt to gather current information. This is professionally unacceptable, as it fails to uphold the contractual obligations to the policyholder and can damage the reputation of the cedent and the London market for timely claims settlement. While prudence is necessary, an indefinite delay without active investigation is not a constructive or compliant solution. A further incorrect approach is to rely on informal assurances from the reinsurer's broker regarding their financial stability. While brokers play a vital role, their assurances are not a substitute for independent, objective financial assessments. This approach bypasses established procedures for verifying financial security and introduces an unacceptable level of reliance on potentially biased information, undermining the principles of market security and due diligence. Professional reasoning. Professionals should adopt a framework that prioritizes proactive risk management and due diligence. When faced with a situation where a counterparty's financial stability might be a concern, the first step should always be to consult reliable, independent sources of financial information. This involves understanding the established channels for obtaining such data, such as recognized rating agencies. If initial information suggests a potential issue, the next step is to escalate the concern internally and engage with the counterparty or their representatives through appropriate channels, seeking clarification and evidence of their financial standing. The decision-making process should be documented, demonstrating the steps taken to ensure market security and responsible financial management. Question 19. The monitoring system demonstrates that a notification of a potential loss has been received by the claims team. The policyholder has provided a brief outline of the incident. Which of the following represents the most appropriate initial action for the claims handler, adhering to London market claims principles? Option A. Acknowledge receipt of the notification and provide a detailed explanation of all potential coverage exclusions that might apply to the incident, even if their applicability is uncertain at this stage. Option B. Acknowledge receipt of the notification promptly, confirm that the claim is being reviewed, and outline the immediate next steps in the initial assessment process, without making a definitive coverage decision. Option C. Immediately issue a coverage denial based on the limited information provided, stating that the incident does not appear to fall within the policy terms. Option D. Delay acknowledgement of the notification for at least 48 hours, while a preliminary investigation is conducted to determine the validity of the claim. The correct answer is C. Immediately issue a coverage denial based on the limited information provided, stating that the incident does not appear to fall within the policy terms. Explanation. This scenario is professionally challenging because it requires the claims handler to balance the need for prompt communication with the importance of accurate initial assessment, all within the strictures of London market claims principles. The inherent tension lies in providing a timely acknowledgement without prematurely committing to a coverage position, or making assumptions that could prejudice the insurer's position or the policyholder's claim. The regulatory framework for the London market, as governed by bodies like the FCA and principles of good market practice, mandates fair treatment of customers and efficient claims handling. The correct approach involves acknowledging receipt of the claim promptly and clearly indicating that an initial assessment is underway, without offering definitive coverage opinions at this very early stage. This aligns with the principle of fair treatment by keeping the policyholder informed and managing expectations appropriately. It also respects the need for thorough investigation before making coverage decisions, which is fundamental to sound claims management and regulatory compliance. The initial assessment should focus on identifying the claim, confirming policy details, and outlining the next steps in the investigation process. An incorrect approach would be to provide a definitive coverage decision based solely on the initial notification. This is professionally unacceptable because it bypasses the necessary investigation and assessment phase, potentially leading to incorrect coverage denials or unwarranted payments, both of which can result in regulatory breaches related to unfair treatment of customers and poor claims handling. Another incorrect approach is to delay acknowledgement significantly, citing the need for initial assessment. This fails to meet the regulatory expectation of timely communication and can lead to policyholder dissatisfaction and potential complaints, undermining trust and the principles of good market practice. The initial assessment should inform the acknowledgement, not delay it. A further incorrect approach is to acknowledge the claim but provide vague or misleading information about the next steps. This can create false expectations and lead to confusion, which is contrary to the principles of transparency and fair dealing expected in the London market. The acknowledgement should set clear, albeit preliminary, expectations for the claims process. Professionals should adopt a decision-making framework that prioritizes prompt, clear, and honest communication. This involves understanding the policy wording, the nature of the notification, and the immediate information required to commence the claims handling process. The focus should be on initiating the assessment and informing the policyholder of the process, rather than concluding it prematurely. Adherence to market best practices and regulatory guidance on claims handling is paramount. Question 20. Strategic planning requires that when a complex industrial machinery breakdown occurs, resulting in significant business interruption, the claims team must determine the most effective method for assessing the loss. Considering the need for specialist knowledge to ascertain the cause of the breakdown, the extent of damage to the machinery, and the resulting financial impact on the insured's operations, which of the following actions best aligns with London market claims principles? Option A. Immediately instruct a qualified and independent loss adjuster with specific expertise in industrial machinery and business interruption to conduct a full investigation and report on the cause, quantum, and subrogation prospects. Option B. Advise the insured to obtain their own independent assessment of the loss and await their report before considering any further action. Option C. Appoint a general loss adjuster without specific expertise in industrial machinery, instructing them to gather initial information and then seek further specialist advice if deemed necessary. Option D. Delay appointing any external expert, focusing instead on gathering documentary evidence from the insured and their suppliers to build a preliminary picture of the loss. The correct answer is A. Immediately instruct a qualified and independent loss adjuster with specific expertise in industrial machinery and business interruption to conduct a full investigation and report on the cause, quantum, and subrogation prospects. Explanation. This scenario is professionally challenging because it requires balancing the need for efficient claims handling with the fundamental duty to conduct a thorough and accurate investigation, particularly when dealing with potentially complex or high-value claims. The involvement of an expert surveyor is crucial for establishing the cause, quantum, and extent of loss, which directly impacts the insurer's liability and the policyholder's entitlement. The challenge lies in selecting the right expert, defining their scope of work appropriately, and managing their engagement in a way that upholds the principles of fairness and good faith, all within the regulatory framework governing the London market. The correct approach involves appointing a qualified and independent surveyor with relevant expertise to investigate the loss. This surveyor should be provided with a clear mandate outlining the specific information required, including the cause of damage, the quantum of loss, and any contributing factors or potential subrogation opportunities. The surveyor's report should be objective, evidence-based, and delivered within a reasonable timeframe. This aligns with the principles of good faith and fair dealing expected of insurers under UK regulations, such as those promoted by the Financial Conduct Authority, FCA, and the principles of the London Market Claims Principles Exam, which emphasize competence, diligence, and fairness in claims handling. Appointing an appropriate expert ensures that the insurer makes an informed decision regarding the claim, preventing underpayment or overpayment and fostering trust with the policyholder. An incorrect approach would be to delay appointing a surveyor, hoping the loss might resolve itself or be minor. This fails to meet the duty of prompt and fair investigation, potentially prejudicing the policyholder's ability to mitigate their loss and delaying their rightful settlement. It also risks the loss escalating or evidence being lost, making a subsequent investigation less effective. Another incorrect approach would be to appoint a surveyor without a clear scope of work or to unduly influence their findings. This compromises the independence and objectivity of the expert, undermining the integrity of the investigation. It could lead to an inaccurate assessment of the loss, potentially resulting in an unfair settlement and a breach of regulatory obligations regarding fair treatment of customers. A further incorrect approach would be to appoint a surveyor who lacks the necessary expertise for the specific type of loss. This would result in an inadequate or flawed investigation, leading to an incorrect assessment of liability and quantum. It demonstrates a lack of diligence and competence in claims handling, failing to uphold the professional standards expected in the London market. Professionals should adopt a decision-making framework that prioritizes a prompt, thorough, and objective investigation. This involves identifying the need for expert input early in the claims process, selecting a surveyor based on their qualifications and independence, clearly defining the scope of their engagement, and managing the process to ensure timely and accurate reporting. This proactive and diligent approach ensures compliance with regulatory requirements and ethical obligations, fostering confidence and fairness in claims resolution.